Good morning, good afternoon, good evening, whenever you are watching this week's video. Y'all, I had to take a week off because my butt was toe up. And if you look close, and I don't want to be too, you know what I'm saying? I ain't put no foundation because I don't wear foundation like that. But from all the things that are going on with me going to the chiropractor, me getting things happening with the sciatica, times I can sit down and when I can't, now my face done broke out like crazy. Like I've had a either detox reaction or allergic reaction to something that's going on. February has been challenging for me. However, I have still been pressing forward. I have found time to rest and reset. Let me tell you, the one thing I can tell you that you can learn in all of this is even when you don't feel like it, thank God for superhuman faith and strength. Because there are days that I'm just like, whoo, and I had to work from the bed using just the laptop. And I couldn't come into the office where I have my multiple screens where I feel like I'm most productive. But I got things done. And then it got to the point where I could move forward and with medication, right? Because I had to take some extra strength Tylenol to get to the point where I could come to the office and then even function clearly. And then it got to the point where I'm on my second week with no medication. Go Jesus, right? And I do have bouts where I'm hurting, but not as much. And I'm a long way from recovery, but I've made a lot of progress, right? And so it'll be stand up, sit down, take a break, do the things that need to be done. And for that, I am very grateful. I'm grateful for my clients who understand and everybody following the rules, right? So we have to answer some questions, but I thank God that we took the time, and there's a lot of videos in our with explanations in our process. And thank God for a team that steps up and answers the questions and steps in when you need them to most. Go team, go team, go team. And thank you for wonderful clients who have been here, who have referred people, who have explained the process so that we can still be productive as we are just hitting the 4th week, right? So we just a month into tax season just started. Can y'all imagine, right? So we are just a month into it and we're getting ready to hit that stride where we hit the first deadline for past due entities. That's my S corporations. That's my partnerships. And I got estate returns that will do some stuff to make sure they're good to go. But making sure that everything is good to go and knowing your process and your procedures so that we can get through. My team is doing a fantastical job. I got to come in and bring in the rear. I'm making sure behind the scenes this week that things workflows flow the way they need to so that we can pick up the pieces. And so I'm grateful for everybody that's coming who understands, who has followed our rules, who even those who are new to kind of jump the gun on some stuff, we have found workarounds with technology to get us to that spot. And so last week, for those who may have been looking for their weekly video, I had to take time to rest. I didn't even do the podcast last Friday because I had to it was my first week coming off of medication and I really had to get through some stuff. I worked, but I couldn't work and be like, all right, let me show up in front of the camera as well. And any of y'all that did see me getting cracked and broke down, that was the first time I had been on camera that week. And that was actually the only time I had been on camera last week. And now I'm showing up very, very self-conscious because my face is like I got the chicken pox or shingles or something, right? That just showed up. And we're pressing through. It's itching, it's coming down, right? But I understand that my body is doing what my body needs to do to reset. I'm grateful that in the evenings I have found times to rest, and I'll be glad when I can get back to the point where I can walk because that helps to clear my head and actually attack the day. But I thank God for the Holy Ghost that in spite of the things that I normally get to do, that I am still able to show up, and we're back this week loving on y'all in a great way. So the week before, we talked about that first thing that was going on, right? The car interest. And I broke that thing down. And if you hadn't seen it and you want to know what interest, real quick recap. It's for the next 4 years. It has to be on new vehicles. If we're refinancing a vehicle that was new, we can pull some stuff out. It's only on interest on personal aspects of your business. I mean, of your vehicle. In the past, cars had to be where you only used, or anything that was deducted associated with a car was related to business expenses. Now we coming in for the personal use only, and we will need certain information and be able to leverage that for the next 4 years. And so the biggest thing is it's got to be a new vehicle. It can't be a used or leased vehicle. And the car had to have been finalized here in the United States. So we have to keep those things in mind. And it's just the interest on that car. And it depends on when the car was refinanced, when the car was purchased. That's a high level, right? They said it's no tax on interest, but in reality, it's a new deduction above the line for cars. This week, we're going to talk about this overtime stuff. So I kind of did a presentation on it. We'll go through it. Y'all let me know what you think. If I need to come back and break it down a little bit better, we will. Next week is our monthly newsletter. And there's some articles on some of the stuff that we've talked about this month, because we still got a couple of more things in the one big beautiful bill that we'll see in 2025 before we break this thing down and start to say, okay, now we talked about 2025. How's that going to change for 2026? And how are we going to move forward? Plus, I got some real estate stuff that people have asked me to come back and break down. And so we'll do some of that as well. All right, we got plenty to talk about because this administration give us more than enough to do. All right, let's do it. All right, no tax on tips or overtime, IRS guidance for 2025. So essentially, we know the OBB came back and said, hey, overtime compensation for tax can start in 2025. There's a whole notice on it, 2025-69. And the crazy part behind this is your W-2 in most cases don't show this, because it was not a requirement for employers to actually break this stuff down between regular wages and the overtime portion that we can take for a deduction. The rules did not get finalized and come out until late 2025. And y'all know we had a shutdown in there somewhere. So the requirement for this actually to show up on your W-2 is in 2026. So you'll see tax professionals asking, hey, can I see your last pay stub? Because there's information on that pay stub that we can use to leverage to figure this out. All right. What's new for 25? New deductions available. How long? That same 4-year window like we're talking about on the interest for the cars. Overtime compensation right now is only going to be on the tax returns from 2025 through 2028. So we're going to take advantage of it while we can. What's not changed? W-2 and 1099 forms remain the same. The IRS is currently updating them. You're not going to see it in 2025. Some people, I have seen it, but I can tell you for most clients that as we're reviewing now, I'm not seeing it. The information is, I have to use people's pay stub to figure this out. All right. So notice 2025-69 also provides transition relief to workers who receive tips and what they can actually use in 2025 to be able to support this information. All right, now here's the basis. Who qualifies? Not everybody qualify, right? Certain industries do, certain industries don't. An estimated 6 million workers reported tip wages and may be eligible. Here's always, when we get stuff, there's always limitations. There's maximum limits, there's floor limits, and then it's based on your filing status as to what happens. Okay, so the most they're going to be able to get is $25,000 in an annual deduction. So we got 25, they could get up to 25,000. 26, they could get up to 25,000. So this is not aggregate. This is each year, okay? All the way through 2028. But you got the queen's cousin, modified adjusted gross income, because y'all know the queen is adjusted gross income, doing her thing just like the queen. They phase out stuff, right? So for single and married filing separate couples, even though that's not on there, right, it's going to be $150,000, and married filing joint couples is going to be $300,000, and then head of household will be somewhere in between, right? So we got phase outs. Here's what you need to know: $6 million tip workers from different industries. What's our max each year? 25K. When does the phase out begin? If you singles at 150K. If you married, it's 300. We're looking at that, right? And we only got this for 4 years. Why is this important? Well, we got to give you some examples. All right. The IRS gave examples of their own. And so they had this one pager that I took this and kind of presented it in a different way. The IRS guidance provides examples on how tip employees calculate their qualified tip deduction. We got Ann, who's a restaurant server. We got Bob, who's a bartender. And we got Doug, who's a self-employed guy, right? For Ann, who's the restaurant server, she had information in her 2025 W-2, box 7, right? She had $18,000 in Social Security tips. She didn't report anything on this form 4137 because employers could give you that as well. So she can use these $18,000 to determine how much of that deduction she can get. Does that automatically mean that she's going to get the up to $25,000? Hey, they got to do some calculations on it to determine how much she's going to be able to use. Now, Bob, he's a bartender. He reported $20,000 to his employer and $4,000 unreported tips, meaning that his employer and them did not put this on, they didn't give it to him, but he documented this unreported tips on form 4137. His W-2 box shows only $15,000. He can use either 15 or 20, right? Plus the $4,000 of unreported tips on that form. Now, Doug is doing self-employed travel. All right, so he might be in an MLM, he might not be, right? Doug received $7,000 in tips via a third-party settlement organization. That means he got documentation. His Form 1099K does not separate the tips, but he got a daily tip log to substantiate his amounts. Why? Because he kept good documentation and did his own record keeping. Listen to what I'm telling you. All right. No tax on overtime. For these 4 years, individuals may deduct the premium. Now, I want y'all to see my face. And the reason why I want y'all to see my face is because of the following. Oops, I'm on the wrong page. My bad, y'all. Let me take it back. The reason why I want you to see my face is for the following reason. This is why I need to see your your pay stub. The last pay stub you got for the year, because that said, I got to know the premium portion, because all overtime don't apply. All wages don't apply. I actually did a client's overtime calculation, and the client had several different kinds of amounts in different overtime categories. I'm so glad that we asked for the pay stub information, because I could go to this instruction, this guidance that we had, because I had to figure out which overtime amount total I was using. And so I took the premium. I took the premium portion because that is what I got to do to put in the tax return. So we got to do the calculation. I'm not making this up. This is what the IRS saying, right? I got to take the premium portion of overtime, the extra half and time and a half required by Fair Labor Standards Act, FLSA, and report it on a W-2, a 1099, or other specified statement. This person had a W-2, but this information was not broken out. So I needed to go figure out where it was. So I asked for the supporting documentation. They provided it, and it made it very easy. And I stressed to them, this is the amount that we're using. So if the IRS come back and ask questions, this is the amount that we're using. And that's what we did to use to get the calculation. All right. Who can claim it? It's available to both itemizing and non-itemizing taxpayers. Why? Because this is before we get to the line. It's on a whole nother worksheet. We do have a Schedule A. We got a Schedule 1. But this information is all being reported on Schedule 1A. Don't ask me. Schedule A is itemized deductions. Schedule 1 is those first adjustments before the line. Then we got a 1A. Okay? So this is above the line before we get to the queen deduction. Whereas to Schedule A, itemized deductions is under the line. under the queen deductions. Okay. Certain employees are exempt from FLSA overtime rules and they don't qualify. That's why I need to see the information. And then we got it. 12,000 for individuals, 25 for joint, and then it phases out. So we got to know the rules across the board. I just can't be just taking, I think it's this, you think it's this, they think it's that. Baby, no, because we'll be wrong. How to overtime deduction, how to calculate the premium. Not the full overtime pay. Here's how to find it. I got a FLSA overtime premium. Find the overtime. Isolate the premium portion. Claim the premium portion. So look at your pay stub. Look at your W-2. If it's not on there, then we got to do some math and we got to start calculating stuff. Okay? The key is isolating the extra half, the premium above the regular hour wages, which is the only portion. That is the only portion that is eligible. Making stuff hard for us. All right? Here we go. Payroll shows $5,000 as overtime premium. And I'm making these notes on people's tax return. Andrew may deduct $5,000 directly. What? I told you this is the same thing I'm doing. And I'm writing the note. Such and such say this. And then I got in my own notes, my own working papers, what I did, how I did it, and how I came to that documentation. And why? Because if they're ever sent a notice because something seemed off, or if I'm ever sent a notice, I want to know what we did and how we made that determination. All right. Then now here, Andrew doing something else. Andrew, total overtime was $15,000. Premium plus regular wages. So that was $15,000. Deductible premium. I got to take a third of this. What? Now, I will have to come back and tell y'all how we came to that third, but we'll get to that. Now, Brad, he's paid at 2 times his rate when he go into overtime. Employer pays double time. That's how he does overtime, right? So therefore, we got to quadruple this thing. Deductible, he got $20,000 in overtime. I can't take all $20,000. I can only take the premium portion. We're going to talk about how we get to that. I'm not going to do it this week because I've been talking mighty long after not talking to y'all for a week. Then Carol, paid on a 14-day FLSA work period. Her premium, we got to do about $15,000 was overtime. We got to know what the rules are. We got to do the premium portion. And I hope these people broke it out like the one client I saw because it makes it so much easier. Then I know what to take. Compensatory time, $4,500 in wages. State, local government paid comp time at 1.5 hours. I got to take the third of it. All right, so we'll come back because I know y'all are like, Patrice, how come some people get a third and some people, why they doing a fourth? And how come just his premium was? Because it let me know that it was a premium. And it made it so much easier, right? Tips versus overtime. Now that's overtime. Next week we'll get into, right? Because there's no tax on overtime. I told you we had cars, we had overtime, we got tips. And then we'll talk about these people as well. We got our tips deduction, right? And we'll get into that in more detail next week because I'm already almost at 20 minutes talking to y'all. But we hit, what I tell you, it's 4 and a possible. New things in 2025. We talked about the car interest. I explained that to y'all. We talked about overtime and how to figure out the overtime portion. I know one thing gonna happen. People gonna start paying more attention to their pay stubs to figure out what it say. Next week, we'll go into more detail on tips, and I'll see if I can find a lot more things to break down when it comes to the tips portion. Our biggest takeaway, and I'll sum it up again not next week, but the week after, because we doing monthly. So the week after, because I got to wrap this up and then do senior for y'all. Overtime, 4 years. If you're an individual, $12,500. If you married, found a joint, it's $25,000. We do have phase outs because we always gonna have phase out. The sweet spot in most cases for the IRS for individuals is $150. If you married, you're gonna double that, right? Do they gotta itemize? No. Can they get deduction without itemizing? They can get this deduction above the line, and then they can itemize. they could also get this deduction and do the standard deduction. This is in addition to, because we got this just for 4 years and we got to know how to do it. In 2025, there's got to be documentation. Got that form 4137. Did I say it right? Come on, Patrice. Make sure you're telling the right number. Before, right? It's either going to be on your pay stub or the information 4137. And we'll look at a form 4137 next week as well, to some 2 weeks from now. As well as the fact that we got to keep in mind that I just lost my train of thought. We have to keep in mind that there's not a requirement for it to be on a W-2 in 2025. If it's on there, sweet, we gonna take it. It'll be in box 14. Our understanding is forms 1099 will look different in 2026. The W-2s will look slightly different in 2026 because some people gonna have overtime, but then some of these people also, they might have overtime and tips. And so information is going to be presented slightly different, so we don't have to do the calculation. Now, y'all HR and y'all payroll people, because I know as an accountant, we're getting a lot of documentation that, hey, be clear when you're running payroll that this money is going into the right categories, because in 2026, this stuff got to hit them W-2s and the 1099s the right way. And so we have to make sure that we, anybody who's doing payroll or putting the reports in or the hours in, are actually allocating those things correctly, so they can show up. But we have a little bit of grace. A little bit of grace in 2025. But it can't just be numbers that you just threw out, you know. You got to actually have some documentation. Either calculations from the pay stub, because we're going to have support. Either calculations that's coming from your payroll companies, like some people in Square and stuff like that. 1099s, 1099Ks, if you got some of these overtime, and even for those tips for people who've done Lyft driving and stuff like Lyft and gig workers, right? And then we'll go back, because I want to give you industries that this is going to apply to, even for tips, because some industries work and some people don't. And it's not a catch-all for everybody, okay? So the biggest thing is y'all documentation gonna have to help us. Do what? Help you so we can help yourself. And that is on me as well. Help us to help you help yourself. And y'all see, y'all pray that my skin get back to the way it's supposed to, whatever it is that's, coming out, detoxing, impacting my face, because that's normally where I detox at, gets better, and that I'm able to not have as much pain in my knee, my foot, my knee bone connected to, right? Hip bone acting up, back, as my body gets back in alignment. I truly, truly do appreciate you all. Thank you for understanding the ability to rest, reset. We back at it. And we'll do a live podcast this week coming up as well. Hopefully stuff won't go off the rockers. I understand it's the State of the Union on the day that I'm recording this. So looking forward to being able to hopefully have a peaceful, less adventureful live this week, but come at you all with some good information that you can actually apply. And if this was helpful, or you got more questions, because I still been like a third, a fourth, fractions. I done told these people it's addition, subtraction, multiplication, and divisions, and now you want to ask fractions? Y'all bear with your girl, because I didn't make these rules, but I want you to know how we're supposed to apply them so that they can show up the best for you, so that we can serve you appropriately. Keep your notes, look at your pay stub, and if you're not sure, don't be afraid to ask a question. And if I don't know, I'll go do the research. I'll go to the resources. I'm in different groups, right? I'm part of different associations that I can go, and I've taken tons and tons of education, and will continue to make sure that we can serve you in the best capacity. Until next week, when we do our monthly, peace out.